Good morning, welcome to Morning Outlook. This is Kim speaking on Wednesday, the 5th of June. So, first things first, news-wise, what's happening? Let's just bring in my calendar here. Just looking at, actually, I'll just update this because we had yesterday's data on there as well. Just first things first, look at yesterday's numbers. I think, yeah, we'd already looked at the Swiss data yesterday, the inflation there, but the job openings has reduced, and they see this as a bit of a cooling off in terms of what's going on with the certainly with the employment side of things in the US, and that's given hope to possibly a cut of interest rates at some point this year. Now that's the new term, as opposed to one in September, one in whenever. Now it's a cut. Anyway, Australian GDP came in less than expected. It's a tough one, this. I was reading through the notes here, and there's still sort of inflation is proving very sticky, as it is in a lot of places, and they're talking about there's still potential for an increase. So Australia increased their rates a lot less than everyone else. In fact, have I got the numbers here? I have got the numbers here. Well, I say a lot less. They're at 4.35. Eurozone was 4. I mean, but you see the New Zealand, the US, and the UK were all in the sort of, well, the US and New Zealand were at 5.5, 5.25. Then you're sort of like almost a 4% down there. Well, more than 4% down on some economies. So they did it softer in the first place anyway, or as they would say in Australia, anyways. So what we got today, ADP non-farms at 115, and of course the biggie there this afternoon for the Canadian dollar is the Bank of Canada's rate statement and overnight rate. Widely expected, it's very highly expected to be a cut there. Anything less than a cut would be quite a surprise. A cut itself just at 0.25%, and then depending on the statement, it really becomes statement driven here as opposed to the cut. The cut's priced in. If the statement was to say further further cuts would be lined up, well, you can see that they are one of the higher rates. Well, the majors, they are the highest rate along with the US. So cuts could be happening. Did I say they're higher? They're not. They're slightly lower. They're at 5%. Beg your pardon. 0.5% less already, but they're still quite one of the high ones. Anyway. What else we got there? Then we got final services. Now we've got the ISM services coming out at the same time. The final services is the S&P number. We've got the ISM, the Institute of Supply Management Services. So it's a different calculation basically. So it's coming at the same time. We've got this on with manufacturing on Monday. So it just, as I say, different numbers coming out there. So that one might be a one to watch more so. The final services, well, it's harder job to count them there. Anyway, then we got the 3:30. We got the Bank of Canada's conference, and that again might lead out with further information. So how's things looking technically? Starting off with the euro dollar as ever, and we just came short of the yearly pivot there. It sort of reacted to that sort of level. You come back, it just sort of pitched up. It's not really too obvious where it's going at the moment. It's sort of pulled away yesterday. I was looking for the sort of reaction off the pivots. It just didn't. It just went straight through for a while, then came and continued through. In the afternoon, we did get the pick up, but it wasn't that strong. It wasn't very quick. You could see, look, it's sort of at midday, it was still looking negative, and then we got a couple of up bars there. It's at 3 o'clock. We got a bit of movement with the news, US news, but barely anything there of a kicker or driver to want to be buying into this market. And at the moment, we got consolidation away from some highs, and it's away from the lows arguably as well. So it's a bit of a coin flip there. So nothing for me at the moment there. We think that we could get a continuation of the downside. I guess it's probably the more likely move. The pound popped and dropped effectively yesterday. Slow movement coming through here. I was just looking at that pop. It was in yesterday, the previous day's movement really. Consolidating as well. Now again, this did exactly well. It did drive a little bit further and start coming up there. I was looking quite interested, but it never kept held above initially, and at 2 o'clock it closed below. I wasn't really interested then, and moving into 3 without any real momentum, and as I said, the euro was looking soft, and so I just stayed out of this. Anyway, didn't go that far and rolled back here. Again, consolidating. It's getting into a more of a pennant, and again it's that sort of each way bet, but the problem with pennants is they're notoriously low graded. The probability is awful either way, so it's not even a decent coin flip at times, so it probably is a coin flip, but it often goes one way and then shoots the other, so patience. Dollar yen, again not really of great interest this morning. It's bounced up there. Yesterday it did continue through, it pushed on through quite well through the early sessions, finally finding some support down into its weekly S4, and that's given it a bit of a bounce here at the moment, so softening up more so than many of the other currencies, but again it was strengthening yesterday when the other currencies were quite flattish. Where's it going to go? The big money is the sentiment on the big money is still very short on the Japanese yen, so it's very weak, so we could see a bit more of this running through, but I'm staying clear of it. I'm just as a currency at the moment. Australian dollar, well, that data didn't really give it too much of a kicker either way, and you see the consolidation. You could argue there's a bit of a bear flag going on here, but it's gone ugly. Maybe if it breaks through these highs here, it will just get a continuation towards its R1, but the bear flags, as I say, it was sort of sitting there. There's potential for that to roll over later, but not looking particularly good. You can see that it's effectively doing a bit of a head and shouldery pattern here at the moment. US dollar CAD. This is one of the worst mornings I've looked at for a while now, because we've had at least some pairs that are looking a bit better. The CAD, well, yesterday we were looking and it caught the bounce there, but it's gone ugly ever since really. Chopping along there yesterday late morning, ran into its R2, pretty much that was it, and it does look a little unlike the others. It looks like it might have, on this time frame, might have a bit more of a continuation this morning, but very iffy market. New Zealand dollar, it's not really what I want to be seeing in the mornings, but of course the CAD, the other thing to watch out for there is the news later, just before I get ahead of myself thinking there's the one. It was the other day, but not today. It's probably well worth holding through there. New Zealand dollar still pitching slightly higher and better than some of the other majors here, and it sort of looks like it's toughening up for maybe another push to the upside. But the R1's not that far away. Double top reaches that at the same time. We've had this retracement on the bigger time frames. That will be showing as a bit of a divergence, so we might see selling coming into that. So overall, on the majors there, not much at all this morning. Let's just have a look at gold and the indices. Gold itself, it's off this morning, and you look at it on a daily basis, it's in a very tight range. Now at some stage we see these ranges, we'll see it break out, and probably break out quite well, but we're seeing the start of something this morning. Very ugly looking price action going on here. I'm just looking at yesterday's. It sold off in the morning quite quickly and then just got into that stifled amount. We found some support off its quarterly pivot there, and well, it's all messy at the moment. Maybe a break of this current bar's lows. S&Ps. So we've seen it 1, 2. How many dojis we're going to get, or hanging men, dojis, whatever they might be? They look more like a doji to me than anything else. It's just consolidation around these highs at the moment. Things have really quite slowed up here. Nothing that I'm really looking at some point we might see a takeoff again, the way things are shaping up, but at least the consolidation is around the near-term highs, which is more likely to give us a shove to the upside. If we get a breakout, we may get a bit more continuation, but really not easy to see too much for these markets at the moment. So if you're looking at the markets and think there's not a lot there, I agree with you. If you're thinking you see a lot, well, do shout and tell me what there is. Sometimes you look at these things and you get a bit of snow blindness or trade blindness, but I'm not seeing any trade blindness off these bigger time frames. 4-hourly DAX here, it's just consolidating within a range. Yesterday, very ugly. Turned round sort of midday, it's selling off, turned round, then sold again in the afternoon there, picking up again. This is a W bottom. Current movement could be pushing up, but there's a lack of clarity in these markets. It's just getting to a bit of a stalling point, maybe leading up for next week's Fed meetings, etc. But yeah, quite messy here. The FTSE just posting quite a bearish engulfing bar here on this current bar. We'll see if we get a continuation post 8 o'clock. That could be a sign of further weakness. But anyway, here we go. Not, as I say, just it's probably one of the worst days I've looked at these markets for a long time. Normally, recently, last week or so, I've seen something to have a go at. Ironically, that one of the sort of, I don't know, it really has got a lot more potential, but the one that was showing a bit more potential was US dollar CAD, but of course we got the news coming out later this afternoon there, so it makes it quite you need the action to happen very quickly. So right, have a great day. I'll catch you in the morning. Bye for now.